July 21st, 2025, Kennett Tortoise Capital sniper trade of the day. So we're going to take a look at a swing trade in the double leveraged exchange traded note, PTIR. It's a double leveraged note on Palantir. So approximately double the return of Palantir in both directions. So our entry was back on 7 July at a price of $20 when it came out of a reversal in the RL10 and gave us a 1-2-3 entry as it crossed the spine of the dragon. That's the 10-period simple moving average. We used a $1 standard risk, which was the bottom of the dragon, and then it moved out smartly for the next probably 10 days to a maximum favorable excursion of $25, and that was 2 days ago. This is the a straight line regression of days -10 through -6. This is -5 through the 0 day. The yellow box represents today's move. So we exited today at 23.8, which allowed us to keep 80% of the maximum favorable gain. The exit was triggered because we had 2 days without making a new 10-day high, and today rejected that price and came down through the regression line, took out the low of the previous day, and our intention was, under those conditions, to keep 80% of a pretty good move. Now, what that equates to was a 19.38% gain over those days. It's almost 2% a day for 10 days. As an example, in the portfolio that we're running live on slice.app, we invested $100,000 from the portfolio and made a profit of just about $19,400 in 10 days. The point of the exit for profit preservation after that exceptional upward move is that it had failed to follow through, and that was enough reason to cash it to keep 80%. This red box here is the range stat, and in PLTR that's $2.20. That's the maximum favorable intraday move in either direction, meaning that if tomorrow it simply opened where it closed and then sold off, it could move all the way down to 2150 and not be an abnormal day given the size of the routine moves that it's made over the past 30 days. So this effort to keep 80% was to lock in an exceptional move that was showing signs of weakening. Notice how the moving regression line is starting to roll over and stall, and then the fall through the straight line regression. That's enough to trigger keep an 80%. Now, tomorrow, if it goes back above 25, that's an automatic re-entry on a Kata 2 move. You could think about being short intraday if it violates below 23.75 and are making a move to capture an intraday move. I typically don't try to short the strongest stock in the strongest sector, but this is such a naturally volatile symbol that that's actually a reasonable intraday trade, intraday only. We would not want to hold the short position on Palantir or its derivative overnight. So this is a standard hybrid swing move that's using our statistical framework to understand reward to risk ratios, standard risks, standard moves, typical rules for preserving profits on outsized winners, and then using some tactical awareness to manage the trade as we go. So that's today's sniper trade of the day. If you were measuring it by R, this would have been a 1, 2, 3, 4 R plus a little bit of change. If you were looking at a percentage gain, you gained 19.38% over 10 days. If you were looking at the preservation of open gains on abnormally good moves, you were able to keep 80% of an outsized gain, and we have an automatic trade frame that's ready to go for tomorrow in both directions. This is a story stock that we pay attention to and trade on a regular basis, both intraday and as a swing and as a core position. This is Ken at Tortoise Capital. Come on, find out how we do this every day. If you're interested, drop me a line. We'll get you connected on the Slice app, and you can follow the live trading portfolio with daily alerts as we make decisions. Take good care and keep your risk measured and your powder dry.